Hello. In this section of our budget debrief, we will be looking at some of the measures the Chancellor has introduced that will be helpful to assist the UK economy to move forward from lockdown. The Prime Minister has indicated the intended roadmap of the timing of physical changes to lockdown, and Rishi Sunak has been tasked with assisting the financial recovery. Amongst other areas, he dealt with measures to ease the return to greater levels of employment by the extension of the furlough scheme, further support for businesses to continue trading if possible by extending grant and loan provisions, and encouragement for businesses to invest with the introduction of the concept of the super deduction for capital expenditure. Lisa, perhaps I can ask you to take a look at the newly announced recovery loan scheme.
Yep, no problem. So I think it was inevitable that Rishi was going to announce further scheme following bounce back loans and CBIL loans that were originally bought in. And whilst I believe that the majority of loans probably taken out under CBILs have likely been used for bounce back purposes, because I think many of the loan applications actually looked beyond COVID and were probably intended to provide a longer financial support, I fear its counterpart, the bounce back loan, hasn't. I think many of these loans went to smaller businesses and will have really been used to help them survive the crisis rather than aid as a bounce back to recovery. So now we have the announcement of the RLS. COVID certainly has been the year of acronyms, that's for sure. So, however, the title is very misleading. The scheme is not aimed at purely providing loans, but actually various finance options. So in essence, the scheme will ensure that businesses of any size can continue to access loan and other finance up to £10 million per business. And this is to help businesses on the slow road to recovery, and if spent sensibly, may create a stronger business post-pandemic. It launches in April 21, and the majority of the major high street banks have already indicated that they've signed up to the arrangement. Full details are being released in the coming weeks, but the finance can be used, as with previous ones, for any legitimate business purpose, including growth and investment, which will help with the new super deduction capital allowances. Whilst it's not clear how the application process will take part, I hope that any borrowing will be subject to the right level of scrutiny and not as easy to obtain as the bounce back loans 3-minute application process, which in my opinion is likely to have resulted in many business owners overstretching themselves on facilities they couldn't really afford pre-COVID, let alone post-COVID, as well as loans probably being applied for non-legitimate purposes.
You mentioned that loans are not the only options available under this scheme. Do we have details of what else could be included?
Yeah, we've got a few. So indications show that term loans and overdrafts will be available from £25,000 to £10 million per business. Invoice finance and asset finance are available between £1,000 and £10 million per business. The terms indicated are up to 6 years for loans and asset finance and 3 years for invoice finance and overdraft facilities. Finance companies shouldn't be looking to take any personal guarantees on any borrowing facilities up to £250,000, and the borrower's principal private residence cannot be taken as security. I'm assuming the usual viability rules for the business will apply, in that the business needed to be viable prior to the pandemic. So good or bad news is that those that already have bounce back loans or CBILs can apply, providing they meet the new criteria.
Thank you, Lisa. On the housing front, the stamp duty reduction that was due to end at the end of March is being extended. The starting point of houses costing £500,000 or more will be extended to the end of June, and that will be replaced by a starting point of £250,000 until the end of September. In addition, government guarantees might be available for those that can only manage a deposit of 5%. Mr. Sunak has specifically stated that he's looking to change generation rent into generation buy. Major boost to the recovery of businesses was the confirmation that business rates relief will be extended throughout the year to 31st of March 22, remaining at 100% until the end of June 21, and at a level of 2/3 for the following 9 months. There's a new concept known as restart grants, which will be available for non-essential retail businesses. They'll get up to £6,000, and some other businesses such as gyms and hospitality outlets will be able to access grants of up to £18,000. This will amount to an extra £5 billion of new money. Sean, perhaps you could sum up the Chancellor's measures in this area briefly.
Yes, thank you, John. Mr. Sunak was very positive in his delivery and definitely optimistic in his outlook. His measures will encourage the continuation of employment by extending the furlough payments, and they will encourage the continuation and growth of businesses with grants, loans, and the super deduction. However, the loans already taken by many businesses need to be repaid. The billions of pounds lent to businesses in the form of the bounce back loan and the Sybil's loan scheme will soon enter into their repayment period. I'm aware of businesses that took some finance just in case and will have the cash flow to repay. However, there will be many who may have forgotten that the £50,000 loan was indeed a loan and does need to be repaid. The timing of this loan repayment may be just at the wrong time. As we often see, it is when the businesses start to get busy that they run out of cash, which may unfortunately lead to insolvency action.
Thank you, Sean. We hope that our brief discussion of this area of the budget has been of interest, and would of course be pleased to deal with any specific questions or concerns in person. Just contact any of us at Lambert Chapman. Details can be found on our website if you don't already have them. Thank you.